Crypto tax enforcement will be ramping up in 2025, and there are some key steps that you can take now to protect your bottom line moving into the future. That's what I want to go over today on this video. I want to go over how IRS cryptocurrency audits are going to impact you in 2025 and what can you do about them now to get yourself in a better position. So this video is going to be relevant to both cryptocurrency investors and Web3 businesses. Basically, if you're transacting in crypto, this video is for you. So there's a few key updates that are going to be impacting the tax enforcement and audit landscape related to cryptocurrency in 2025 and beyond. One of the first ones are the 1099 DAs. This is a new tax form that is going to be getting issued by brokers that are going to be reporting your transactions to the IRS. So when we say brokers, think of exchanges and other centralized entities where you may be transacting. In the past, they were reporting to the IRS on a very limited basis. Now moving forward, every one of your transactions is going to get reported on the 1099 DA. So, these greater data sharing initiatives by themselves are going to lead to greater tax enforcement by the IRS, because they're going to be able to determine to a greater degree taxpayers that are underreporting or not reporting their transactions. And even before this form is getting issued, we see this a lot at Camuso CPA already, because the IRS does already have a lot of data that they get from exchanges via reporting and even via John Doe audits and other mechanisms. So there's going to be even a bigger ramp up in this as they collect more data. Additionally, when these forms come out, if they're not reported correctly, and you either only report your crypto accounting and you don't report the tax forms or vice versa, you can have compliance issues related to that, or you can be overpaying in taxes. So one big consideration is that you will be getting these forms this year and you want to get into compliance. That means that if you haven't filed your crypto taxes in the past, now is the time to get up to date. Do not be one of these people that I'm speaking to every week that waits till they get a tax notice from the IRS with a tax bill and realize that they have to go start to do, in a lot of cases, several years of their accounting. So that's number one, is Form 1099 DA is coming out. So another aspect of this that everyone has been overlooking is the fact that the IRS has also created a revenue procedure that completely changes the way cryptocurrency is accounted. And that is Revenue Procedure 2024-28. What this revenue procedure does is requires everyone to switch from universal accounting to account-based accounting. What does that mean? It means that if you have 15 different wallets and they all have Ethereum in them, under a universal basis, you are going to apply an accounting methodology just to the asset itself, irrespective of where it's held. Under the account-based methodology, you'll apply an accounting method to each wallet and each exchange that's holding that asset. So number one, this can change your capital gains calculation to a great degree. And if you don't make that change and you're just calculating on a universal basis, when you undergo an audit, there can be significant adjustments that are made to those tax calculations that can lead to interest and penalties. On top of that, there is a deadline to make the shift from the universal basis to the account-based tracking, and that is by January 1st, 2025. In addition to making the change from universal to account-based by January 1st, 25, you also have to leave standing orders with brokers by January 1st, 2025 that are going to dictate the accounting methodology that they apply to assets that you transfer to those exchanges. And you need to document standing orders for all of your non-custodial wallets as well. So what this positions is that the accounting is getting more complicated and the management of your funds on chain is getting more complicated, because gone are the days where you're going to be able to save your account until the end of the year, plug in all of your wallets, cherry pick the highest cost basis for an asset you're selling after the fact, and file that with the IRS. this is inaccurate, and Revenue Procedure 2024-28 has clarified this. So you have until January 1st to get your accounting in order, and then to make sure that it's maintained properly on an ongoing basis under this account method, and that your standing orders are left properly, and that ultimately, you get into compliance. So you're going to, before January 1st, 2025, have to make sure that your crypto accounting is up to date, just so and your tax filings are up to date, just so you're in compliance, anticipating the third-party reporting that's coming out next year. And then you're going to need to revamp your accounting system to make sure that it complies with the revenue procedures and to switch from universal to account-based. And you're also going to have to make sure that you leave standing orders with brokers. Obviously, this creates a necessity that your accounting is accurate, not only for your gain and loss calculations, but also for your cost basis calculations. So at Camuso CPA, we are one of the leading firms that are assisting people with this revenue procedure. We've been sounding the alarms for months. We've been warning the whole entire industry. So if you are a cryptocurrency investor, if you are a Web3 business, and you need to get into compliance, whether that is updating your accounting system for this revenue procedure to make the switch from universal to account-based, or if you just need to work on some back years of taxes and accounting to get your compliance up to date, that's what we're assisting people with on a daily basis. So I'd be happy to speak with you regarding that. Feel free to contact me at CamusoCPA.com, and we can have a conversation about your accounting and taxes. Until next time, I'm Patrick Camuso, signing off.